The SMH is down 3%, on pace for the worst day since May 13th. And I can go down the list of these names that are getting obliterated month to date, and in some cases even today. What do you do?
Well, I think, first of all, investors have to remember that in pursuit of alpha or outperformance, clients rarely get beta. Because what they end up doing is they end up selling low and buying high because they trade on the headlines. And so, first of all, if you're an investor, I would caution against trading against the headlines. And if you also have a 3-stock portfolio of Qualcomm, Nvidia, and Apple, you probably haven't had a good couple weeks. Outside of that, the S&P is down, 5.5% from its all-time high, or close to that. And so I think we want to have some patience. But when you look at what the White House is doing, they're definitely doing the right thing. We need to nip this in the bud. You know, it'll make China better, it'll make us better, and then I think longer term, stocks go higher. All
right, so the question, Weiss, is how much pain do you get along the way? If you look at the chip stocks, I said I'm going to go down some of the names here just to give everybody an idea of how bad the damage has been for names that were highly popular, not only on this desk, but in portfolios of many of you I know who are watching the program. Nvidia is down 14% year to date. You know that stock is down almost 50% from its 52-week high, as is Micron and Skyworks and onsemi and Xilinx and Qorvo and Intel and on and on and on and on.
So when the news hit the tape last week about Huawei, I had sold most of my Skyworks and I sold most of my Lumentum. I proceeded to sell the rest of it the following day because in terms of semis, I owned them for the 5G play. I didn't own them like a lot of others owned them because of momentum in chips. I thought chips were overvalued. I repeatedly said that NVIDIA was vastly overvalued because nothing had improved. They made an acquisition, but nothing had improved since the company missed earnings, since data centers have been weakening. So I think there were a lot of vestiges of that in people's portfolios. They didn't know what they had. They were hoping they were going to come back. So that's on those. In terms of trading the headlines, I agree with you, but this is an impossible market to navigate. And the reason being, it all comes down to one issue, and it comes down to the issue of China trade. So that's the near term and the intermediate term on it. And look, I agree with going after China. I don't agree with the tactics the administration's using. And I don't know if Trump's playing it for the elections or not. But it's foreign land to me in terms of inputting that as an investor, as it is to everybody. So what do I do? So I keep my core positions. I lightened up on a little United Rentals because I do think this will slow growth in the U.S. I've had a great run in that stock, so I took profits. Boeing, I didn't sell any Boeing, even though to me that's ground zero in this, because China will come right after them. So you got to be careful. You do have to take a longer term view, but how long is longer term?
Well, if you have semis, which have led you up, they've led you down, and they're leading you down, how do you get the market to react positively in an environment where semis, you're already having sales decline, the sales growth decline at the greatest pace since the crisis. And now you got this issue on top of that, and some tried and true names, Joe, that have gotten hammered.
Well, I think it's great to talk about the semis because we were talking about the semis in January and February. And to your point, in order to create some alpha, I wanted exposure to a higher beta play in technology, and that was the SMH. And I talked about that, the ownership that I acquired in January, and I rode that higher. Now, getting out of the SMH like I did 4 weeks ago, it wasn't about, okay, I believe that there were going to be headline issues with the Chinese. It was more about, I think Steve and I, we spoke about this, I didn't want the beta exposure. I didn't want the volatility. Where we are right now with the semis, it's a perfect conversation because there is no edge. I think that's what's happened in the market in the month of May. Whether you're trading, whether you're a portfolio manager, you're always trying to define where's your edge. The edge is not visible anymore. And when you look at semis, 48% of their sales are directly into China. S&P 500 overall is only 2% sales into China. So, of course, while we have these trade tensions that are going to continue, the semis are going to be the hot flash point, and I'm not ready to step back into them just yet.
But that 48%, and I know you know this, a lot of it is not in the end market in China, right? It goes there into China to come out in end products. So they can shift that supply chain elsewhere, which is what they're doing. But it'll take a little time to do that. We saw it from Light today.
I've heard that. Can they?
Not in the way that people
not all of it,
tomorrow.
but absolutely they can. Of course they can.
Well, yes.
They can go to Malaysia.
Over time.
I went back and read.
Yeah, you can't snap your fingers.
No,
No. I said over time.
Wafer
That's why I said,
fabrication
I thought you'd
plants
snap your
tomorrow.
fingers.
Those are clean shops that need to be, espoused. Listen, the reason there's no alpha here, I think, or no edge, as Joe put it, is I still think that people are absolutely misapprehending what's going on between the United States and China. This is not just a trade dispute. It's not just a trade war. There are foreign policy implications. I was with a strategist on Friday. We were doing a presentation together who had some military experience. All the technology that we're talking about today has military applications. When you're talking about 5G, when you're talking about autonomous vehicles, and those autonomous vehicles, by the way, will extend to military uses. We're talking about geo-positioning, all these different types of things that are not just consumer-related products. The U.S. has the view of China in this administration as an existential economic and military threat. That's why this is not easy. That's why the edge is lost, because I still think Wall Street doesn't understand the commitment that this administration and the president's advisors have to dealing with this in a much different way than we're accustomed to doing.